It will depend on the data that we're going to get from now until September 27 and even beyond, because we want to make sure that our monetary policy action is really related and determined by the data. What are these data? The data will include further inflation readings down the road, the state of inflation expectations, the weakness or the strength of the Philippine economy, and the credit as well as liquidity conditions in the Philippines today.
Is there a risk that inflation continues to overshoot your official target because of higher oil prices, Governor?
Yeah, our expectation so far is that the readings for the rest of the year will continue to be elevated. But in terms of the fact or the trajectory, we expect that this is going to start coming down in the last quarter of the year and on for the next 2018, 19, and 2020.
You are a net importing country, and there are now calls for $100 barrel oil towards the end of this year or early 2019. Under that scenario, Governor, can you quantify the upside risk to inflation, the policy implications of $100 a barrel oil, and how damaging that could be for the growth prospects in the Philippines?
Yeah, well, all other things being equal, a 1% increase in oil prices, in global oil prices, will generate about 0.03 percentage point in inflation. But in the Philippines, we have other measures that would mitigate these possible pressures coming from the oil side. As you know, inflation in the Philippines for the last 8 months of the year was supply-driven, particularly food commodities like rice, meat, fish, and vegetables. And we have done a lot of mitigating measures to make sure that food prices will continue to be more or less stable for the rest of the year. So any inflation pressure coming from the oil side may be mitigated to a large extent.
Governor, can we be so sure that food price inflation within the context of the Philippines is going to remain in check after the devastation caused by mangkut on the rice crop? Are you adjusting your inflationary expectations as a result of that?
Well, two things. One, rice prices are expected to start moderating towards the last quarter of the year. We have done sufficient importation. We have also tried to liberalize the imports of additional food commodities, including meat and fish. And of course, in terms of oil, there is the possibility that for the next year, 2019 and 2020, we would expect that some mitigation will also take place. What is this? We expect global growth to be somewhat tempered in the process, and that is expected to show some impact in terms of lower oil prices. The other point is that yes, there was some weather disturbance in the Philippines, but the initial report is that this is limited to certain areas in the Philippines. The effects are basically isolated, and we would expect that the impact, Governor, would be tempered over time.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.